And welcome to the UK Mortgage Market Insights for the week ending the 1st of December 2023. I hope I find you all well. In this week's episode, we're going to be taking a look at the latest swap rate chart from yesterday evening. We're going to be taking a look at the lender rate reductions for this week. We're also going to cover off mortgage approval data from the Bank of England and property transaction data. We're also going to look at the nationwide house price index, which has just been released, and show some interesting information, so stay tuned for that one. And then I also want to take a look at the Mortgage Works Buy-to-Let Barometer, which covers buy-to-let data for the Q3 of this year as well. So lots to cover, so let's get straight on with it. So for those of you that are actually watching this rather than listening on Spotify or other podcast channels, you will be able to see on screen the data that I've just put up. This is the Bank of England mortgage approvals data. It's the October 2023 Money and Credit Report. And as you can see, mortgage approvals for house purchases increased in October from 43,700 in September to 47,400 in October. So not a huge jump, but it is actually a move in the right direction. This goes to show that there is increased confidence in the property and housing market. And I think this is partially to do with the fact that we've seen interest rates reducing of late, and therefore it's making affordability better for those people that are looking to take out new mortgages. I do think we need to tread with caution, though, because I do believe that 2024 is going to be a bit of a tricky year. Going to be a tale of two stories. On the one hand, there's going to be a lot of focus on interest rates, on inflation, and on the Bank of England interest rate. And then, of course, we've got the general election as well. 2024 is going to be a tale of two stories. So buckle up and be prepared. So next up, we're going to take a look at the UK monthly property transaction data, which actually shows some interesting information and is a little bit a counter argument to the article that we've just covered. So again, as you can see on screen, the UK residential property transaction numbers in October is 90,920. That number is 17% lower than the same time last year and 2% lower than September of this year. So that goes to show that the numbers have dropped. So we were asked for our commentary by an industry publication, the Intermediary, and as you can see on screen, we talked about how the year started on a low because we were coming off the back of the Liz Truss mini budget, which, as we all know, caused absolute carnage. And at the beginning of last year, things were really muted. We then went further through the year. Things gained a little bit of momentum. It seemed to feel like it was getting better. But then the interest rate hikes and the economic data was really not looking very good at all. This in turn prompted all of the lenders to hugely increase their interest rates, and it just felt like they didn't want to lend. So the property market almost came to a grinding halt. But now we've started to pick up a little bit of momentum again, and things are starting to slowly improve. So I have to say, I'm not surprised by these numbers when they look at the whole snapshot of the year, because things are quieter than they were last year. But when you look at it month on month, the transactions are not as bad as they may seem. And I think they are going to start to slowly improve. So do watch this space on this one. Next, I just want to take a quick look at the lender rate reductions this week. Now, there's far too many to cover because this week has been a bit of a crazy week. But I just want to pick out a few of the lenders and some headline information as well. So this week, we've seen the likes of Accord, Barclays, The Mortgage Works, Halifax, NatWest, Santander, all of these lenders reducing rates this week. But the real key one for me is Barclays. Earlier in this week, they announced some exclusive mortgage products that are available to certain brokers, me being one of them. And these were effectively market-leading interest rates for 2-year fixed rates for people purchasing and for people remortgaging. Not only did they come with quite low interest rates, they also came with really low arrangement fees. So that was great news. But then yesterday, they also came out and announced some massive reductions, and they were now offering 5-year fixed rates for purchases at 60% loan to value, around about 4.3%, which is just unheard of at the moment. That's fantastic news, and it is a sign that things are slowly improving. This was swiftly followed by a numerous amount of lenders that also wanted in on the game, and they've also been reducing their rates as well. So do keep a close eye on this. As we head towards the end of the year and into the beginning of next year, there is a real hope now that we might start to see some mortgage rates somewhere starting with a 3. Next up, we'll take a very quick look at the nationwide house price index. I haven't had a huge amount of time to go over this data because it has only just been released this morning. But in essence, this is a little bit confusing for people because it does seem to show that house prices went up in the previous month. According to Nationwide, house prices rose by 0.2% in November. They do say that annual house price growth remains weak, and in actual fact, year on year, house prices are now 2% less than they were at this time last year. Now, let's not forget that this data is only from the Nationwide and it only covers their property transaction by way of mortgage. So it is a little bit skewed. And as I say, it doesn't cover the whole market. That real data is only available from the Land Registry. So that's the information that we really do pay close attention to. But this just gives a snapshot of current conditions with the Nationwide. And it does look like things are starting to slowly improve, which again comes back to what we've been saying about interest rates and lenders making these rate reductions of late. So next up, let's have a look at the latest swap rate chart from yesterday evening. What I really want to focus on is the current column and the column from the 30th of October. As you can see, the swap rates have reduced significantly since the 30th of October. There was a slight bump in the road yesterday, nothing to be too concerned about. But overall, the trajectory of swap rates is downwards, and that's why we're seeing all of these lender rate reductions, which is great news. Now, of course, there is no guarantee that swap rates are going to continue their downward trajectory, which in turn means that we may see the lenders stop reducing their rates. But it certainly seems at the moment that things are moving in the right direction. And if you look at the 5-year swap rate in particular, at 4.11%, we're very, very close to breaking into the 3% bracket, which is a sign that we might see a 5-year fixed rate soon, starting with a 3 rather than a 4. Let's keep our fingers crossed. And then lastly, we want to take a quick look at the Mortgage Works Buy-to-Let Barometer from Q3 of this year. So this is a snapshot of the buy-to-let market. I'm not going to take too long to look at this because I have done another video focusing on this in a bit more detail. So if you haven't seen that, then please do go take a look. But just having a very, very quick overview, the main things to take from this is that a lot of landlords are saying they're not going to buy any more properties in the course of the next 12 months, which is obviously not great news. And I think a lot of this is because of the stress test calculations that are in place, meaning it's really, really hard to actually get those buy-to-let mortgages and to make the numbers work. But for those people that are looking to purchase, there are now more landlords considering purchasing a limited company name rather than a personal name, which we're starting to see as well. It's becoming more and more common for people to do this. And primarily, I think because those rental calculations are easier with limited company mortgages than they are in personal names. But overall, in the previous 3 months, they are saying that there is a general feeling of calmness and ease amongst landlords. And I think that their positivity is starting to slowly improve because we are starting to see these rates reducing. But that's just a very quick snapshot of the report. As I said, it is available on my platforms of more in-depth video covering this, so please do go take a look. And that's it for this week's update. So I hope you found that information useful. As always, I really do appreciate your support, so thank you for watching. As I've said before, we are available on all social media platforms, and this is also now broadcast as a podcast, which you can listen to on Spotify and Apple Podcasts as well. So if that's something that interests you, rather than watching, you can now just listen. Also want to remind you all that if you do have any burning questions, please do make sure that you follow us on TikTok, because every week on a Monday and a Wednesday or a Tuesday and a Thursday, we are live in the evening from 6:30 to 8:30 p.m. answering any questions that you have in relation to the property or the mortgage market. So there's an opportunity there to jump onto our live and ask any questions that you might have, or cover off any concerns that you might have as well. As always, again, thank you for your support. Hope you found it useful. Have a great weekend, and I will see you next Friday. Take care.